seem like anybody else is joining.
Yeah. So, okay. Progressive exposure. This is something that I have read last year. This one looks. After I read it, it felt like I don't know why I didn't do it for so many years. But anyway, for somebody to do the progressive exposure, they should believe in their own trading style. They should believe that when the time is right for them, they're going to make money. Okay. And to get there, it takes a while. Okay. To believe in their setups. Okay. It takes a while. Once you are there, the progressive exposure makes a huge difference. So what is progressive exposure? So let's say you have a $100,000 account. Okay. So you start with 10% of your portfolio. Okay. There are only two outcomes. Either you make money or lose money. Let's assume you made 15% on it. Okay. You made 15%, which is $1,500. Okay. So now you have that $1,500 cushion for that year. Okay. You just started this year. You have $1,500 cushion. So the next trades that you make, let's say you take two more trades. Okay. With 7% stop for one of them, 8% stop for one of them. So now you are risking that $1,500 you made in the next two trades. If they work out, you make more money, you increase your position. You make it from 10% to 15 to 20% of your portfolio to actually you can increase the more as it works. That's progressive exposure. This way, you will never lose money. Okay. But again, the basic assumption is that you believe in your own analysis. I mean, which is hard. I am sure which is hard, which does not come easy to anybody who are just starting out or, who has been in the market for 2 or 3 years. It's not easy to believe that they are going to make money because market is not easy. Okay. What we expect today when we wake up and what happens, I would say probably even for me, even now, I am probably wrong 50% of the time, at least. So nobody knows what's going to happen in the market. So for progressive exposure, you only put in more money when you are making money. So let's go back to the same scenario. You have $100,000, you put in $10,000, okay? You lost 10% on it, okay? So now you are $1,000 in the hole, okay? You now start with just one position, $5,000, that's it. See where you go, okay? You lose money again, you lose $500 again, okay? It means that one of two things are happening. Either the market is not ready for your strategy, okay, which was what was happening last year. I am a breakout trader and things were breaking out and failing, breaking out and failing. So that's why most of my trades last year were much more short term. I was analyzing my trades, my average hold period, my stocks and options were 4 days. 4 days, that's probably the lowest ever. Anyway, so let's say, so now you lost $1,500 after you started. You have to wait until your strategy comes back. What does that mean? It means that your breakout trades are actually working. Until those strategies are working, you will be out of the market. There is nothing wrong with it. This is something that I've learned in the last 2 years, is that when people are wrong, I mean, this is something that I used to do. When people are wrong, they actually double down. When a stock goes down 10%, they add 20 more percent. Okay. And they tell themselves, I mean, that includes me a few years ago, is that they like the company and it's cheaper now. The most important question they should be asking is, if it is cheaper now, if it's a good company, why is it going down? Now, this year I have a close friend of mine. He was telling me that he sold puts in Baba and he lost a lot of money because he had to buy it, and and looking at this chart, not now, but when you see this kind of move, even from 320 to 200, and this is a good place to get in, I would say. I mean, actually, I think I got in one of these places, and when it broke, I got out. But if something like Baba went from 300 to 200, that definitely looks an amazing place to get in. Okay. And as I was saying, you sell a put here, it feels like that's free money. But if it does not work out, that's going to be a horrible thing for you. And looks like a lot of people are in Chinese companies in the last year because everybody knows Alibaba, right? I mean, how can anybody think that a $300 stock would come all the way down to $100? They weren't, but that's what happens in the market. Nobody is looking at this one. I mean, it went from what? 167 to 320. Nobody is looking at this one because they are not looking at, first thing, they're not looking at the charts. If something can go up like this, it can go down the same way. So unless the price tells us that we are right, we are not right. So again, are there any questions on progressive exposure?
No, I think that sounds good.
Yeah, but again, the biggest assumption is that you know what you are doing. That will take a while. And also the second thing, but when I talk to my friends, one of the reasons they don't want to get out on, when you have a stop and you don't want to get out is because they don't want to be in cash. Okay, if they sell this, what is it that they're going to buy? Nobody likes the idea that they want to be in cash. But believe me, sometimes waiting for the right time gives you an amazing advantage against the people who are long while the stock is going down. All right, so that's about the progressive exposure. And the second one, let's go to the options. So I think let's do the position sizing first. So I don't know how you guys are doing it. So let's go back to that. Let's say if you have 100K portfolio, and if you are spending like 2% of your portfolio on each option size, which is about $2,000. Okay. So if you are doing that, you should have two things. One is the maximum amount of money that you are willing to put in options. Let's say if your max is 12% or 15% or 14%, let's say, that's about 7 positions. I would never go beyond that 14% in options ever. So that means that my options positions on the whole will never be over $14,000. It doesn't matter whether I have profits or not. If I have profits, I will trim something, okay, and make it down to 14,000. Because when or the day, I mean, this happens. I mean, this happened to me on on the COVID time when it went down on 1 week. I had about, I think, 18%, I think, at that time during COVID time in options. So this is very erratic. I don't know what happened. This is not how it used to be. Look at that. So on this day, on this week, that I waited for 2 days for it to bounce. Everything went down like 80% of it. 80% is lost. All of my options. So in a matter of week, I lost almost 20% of my portfolio. So that could always happen. That could happen to anybody in the market. If they have 20% today in options, tomorrow morning they could lose all of it. So the worst case scenario could happen. I mean, it probably happens once every, I don't know, 5 years or 7 years, I guess. But always keep that in mind. If you keep that in mind, you will never exceed that, 15 or 14 or 20% of your. For some people, 20% portfolio is a lot. For them, don't only do 1% each and 10 positions, or 2% and just 5 positions. That's always a good idea. So always remember that the maximum position, the maximum amount of portfolio in options, that could totally go to zero in a single day. So, and okay, and I am doing that. 6 contracts is. Let's go to Slack. So here we are with Slack. So whenever I say this 2/3 position or half position, let's take one of these. Let's take this one. Okay, hold it up. No. There is a new trade. It's sold, bought. Okay, this is a new trade, right? So I bought this. Again, that's not a new position. Okay, all right. This is a new position. Okay. So when I say, let's say you have 100,000 and you want to put 2% of your portfolio, okay, which is $2,000. So when I said 3 contracts, I meant use whatever number of contracts to buy only $1,000. So 2,000 is your full position. Half positions would be $1,000. So you would get what? 8 of them.
But for total percentage or for just that option? So like you were explaining, $14,000 is, let's say, your total option money that you want to play with options, right?
Yes.
So is it?
No, so for one position you would spend, let's assume 14,000 is for everything. So 2,000 for each position. So if this is a half position, you would spend $1,000.
Okay, got it.
Okay, so you would buy what? Half position would be 8 positions, 12 8s and 9 6. Yep. So you would buy 8 of these, and you will go forward with that. And the reason I go with half position is because I am still trying to figure out if that's the market I'm in or not. Right now, I have no clue where the market is going. I mean, the only 2 good trades that happen in the whole week are these two good trades. This worked well, and I bought this at the end of the day. I mean, when was this? At 2 o'clock, and this one I bought at 10:45. So these worked really well. And if we go look at those charts, I wasn't sure about those either, but for Monday, if we have a follow through, any of these kind of positions, I would probably go more and more off. So I was looking at this support level that broke down, and look at how much it bounced when you compare it with this candle. This is a very, very, very minuscule candle. That means the amount of buyers getting in here are really less after that kind of move. And the next day, once it started breaking this level, that tells me that there are more sellers in the play, and there is no support until 145. That's why I bought, is it 165, 145? No, actually $15. 160 and 145 is what I bought. So again, we will also talk about rolling here. So once, and then this went down. Let's go to. So it broke right here, right? Actually, 160. Yeah, this is where we bought. This is where we bought after this one broke. This is where we bought 10:45. Yeah, right there. So after this broke, I bought it here, and it went up and it started moving lower. okay? And the only reason I took some off is because, we are going into the weekend, and, I want to take a little bit off and, keep the rest. So I tried to reduce 1/3 of the position, but the options are so horrible here. What I mean by that is 160, look at that, that's 90 cents, okay? Here it's only 50, but it's 90 cents. 90 cents is a lot. That's almost 10% of your profits, the difference between your bid and ask. And that's how it was during the daytime too. So sometimes, over the weekend, you will see them to be far away. But the best thing to do is if these were right next to each other, means 860, 870, okay, 870, 880, 10 cents, 20 cents is fine. But so what I try to do is I try to sell 1/3 of 160, 145. I couldn't sell it because, there was not enough volume, and because of the spread, it's not giving me whatever I expected. So I tried this one. I tried rolling it because they are right next to each other. So it paid me $250, $2.50. Now I have 155 and 145. I think it costed me around $2 or something, $2 or a little bit over $2. And I have a $10 spread. And why 145? The most important point over there is not the 160, it's the 145. Because the idea is that it could go all the way to 146 and bounce. If it goes there and breaks that one too, okay, we'll make that entire $10. If it goes there and starts to bounce, then we can get out of the trade. But the target is that 146 level. That's why I sold 145. And what is the other one? CLH. Very similar setup as, Amber here right now. Actually, this is even worse. Amber is somewhere around here. Okay. And this is even a better trade because look at the weekly. So you have, when is that? July. Anybody from even here, what is that? May? Anybody from May all the way, until yesterday, they're all underwater now. You have so much supply above you, this could easily come back to 43. And once that's broken, you have all these people, they are all underwater. They are all ready to sell. If this breaks 43, I don't know how far it's going to go. Let's not go monthly, let's do weekly, bigger picture. Yeah, I used to think when I was not shorting them, I used to think that it's already down 50%. How far can it go? But especially this year, since last year, things are going really bad. So here we have a breakout. You could probably say this as a breakout or even this as a breakout because there's not a lot of volume between this and this level, which is 24 and 27. So it could go all the way down to 27 or 24 if it breaks 43. Here, all these guys, there is not a lot of, see, anytime market moves sideways, there you have a lot of support. More volume over time means more support. Okay, and here, from here to this range, which is what, 27 to 40, which is $13, not a lot of, because there is no sideways move at all, straight up. This does not give you a lot of support. So breaks 43, it goes to 27. I know it feels like that's a 70% correction, but that could happen. All right, what will be done? The position sizing. So are we clear about the position sizing?
Yeah, for me, it's clear.
Well, we can go through this again, when you guys have.
Hey,
yeah.
KP, I joined late actually.
Yeah, sorry, that's fine. Yeah, we just started.
Yeah, Yeah, thanks. And on the position, right? So I think I heard when you said off position and full position and all those, like $2,000 and all those, right?
Yeah.
But when you say +3, you mean 3 contracts, right? And then when you say -1, you mean you are selling 1 contract.
Okay, that means that 1/3 of whatever position you take. So let me explain that a little bit in my own case. I'm going to mute you for a second. Can you unmute yourself? There was some resound. Go ahead. All right. Let's go back to the same.
Did you hear my question? I thought I don't know if I was unmuted.
I did not. Can you repeat it?
Oh, I'm sorry. So going forward, when you're going to put your trades, right?
Yeah.
Are you going to mention like half position, full position, and 1/3 in all your trades?
I am going to, yes. And
okay.
There are 2 things I'm going to do. I'm going to say +3, and I'm going to say half position. Okay. And when I say +3, the thing is, the idea for us is six contracts is full position, and everybody has a different portfolio. So if you have 100K for this one, when I say half position, that's about, let's assume that your full position is 2% of your portfolio. That's $1,000 for half position. So you would be buying about 3 contracts. So this would be perfect for a 100K portfolio.
So 2% is the one that for each option contract. Is that 2%?
That is something that you need to decide. Right now, for my portfolio, it's so big, I'm not even doing 1%. I'm doing 0.5%.
Okay.
So I mean, that depends on, as you become bigger, you need to figure out which one works better for you. And let's say if somebody has $20,000 portfolio, they can't even buy 3 of these. I mean, they need to figure out what to do.
Yeah.
Once you figure out what your full position and half positions are, things will be much more easier, and you don't have to think a lot anymore.
Yeah.
All right, let's go back to the frame. All right. So that's position sizing, but whenever it comes to, okay, I will tell you where people go really, really wrong when it comes to options. What they do is that let's say they spend $10,000 to buy a stock. Okay. When they buy options, they will buy $5,000 worth of it. Okay. And that's really wrong. I'll tell you why. If you buy a stock, I'm assuming it's a decent fundamental stock that we do decent fundamentals, it's not going to go down 50% and you're not going to lose $5,000. But if you've put in $5,000 in option, you'll probably lose $2,500 the next day. That's highly possible. That's the worst case scenario. Actually, that's not even the worst case scenario. You could probably lose 80% or 90% of it the next day. So you need to figure out for each position how much you are expecting to lose. And the second thing is, how much of your portfolio are you losing? So again, position sizing, I would say if you are new to options, start slow, feel comfortable. When you start to feel comfortable, you can increase the position as a whole. So let's say you can still keep that 14 or 20% max for options. And let's say if you have 20% as the maximum in options, and right now you are buying 2% each, and you can go up to 10 positions. Eventually, what you could do is you can cut down that into 6 positions and make it 3% each. Okay. As the market starts to look better and as you are making more money, that 20% should remain constant, but the position can be increased to a bigger size. So, but again, right now I'm very sure we are not in that market. Market is definitely not. And then I have been a long, I'm not a guy who has been shorting a lot. I would say probably 3-4 years, maybe max. Before that, I never shorted stocks or even buying puts, very, very rarely. But I think that we are not in the, so there are 4 stages for the market. I can actually show it right here. So this is stage 1. Okay, stage 1 is when the stock moves sideways. Stage 2 is this one. Okay, actually this is not the perfect stock, but yeah, stage 2 is this all the way here. Actually, I would say probably until here. Stage 3 is where it moves sideways. Okay, and not a lot of higher movement, but stage 3 is where it moves sideways. Stage 4 is where it goes down. I think we are in the stage 3 to stage 4 right now, especially for the SPX. That's where we are. Actually, even SPX looks okay. Oh yeah, I was looking at this one. So this is all stage 2. Okay, we might be just moving sideways. This could be stage 3, and the stage 4, it might be going down. Do we know for sure? No, we don't. If it breaks these highs again, this is the weekly chart, by the way. If it breaks this, yeah, but we could still go higher. But this is not something that you want to see. So how many instances did we see? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 weeks sideways move. I don't see anything at all. So if it moves sideways and start to move lower, that will be a stage 4. And one other way to figure out which stage we are is not just by the indices, but by the stocks. The growth will come down first. So I was talking about, this was one of the very good stocks last year. And we can go through a bunch of stocks that I have right here and see they haven't been great at all. So last year, it has a big move sideways, broke out, went up. Look at that. That's not something you would see you wouldn't see this on a healthy market. And this is probably one of the best stocks last year. Yep. So, and this went down what? 282. I was talking about this on Friday. It went down 50%. You would not see growth stocks go down 50% in a healthy market. So either the growth stocks will start to move higher, and we still don't know if, but growth stocks, most of the growth stocks are in stage 4 right now. They are all moving down. We still don't know what is going to happen with the rest of the market.
Hey, Kepi, I have a question here. So when you say growth stock shouldn't be moving 50% down.
Yep. In a healthy market.
Yeah, in a healthy market. So it means that the market is not healthy for sure. But second is, does it mean that it cannot turn around, or it cannot be a growth stock when the market turns around?
There is no surety at all.
I was expecting that, but yeah.
No, the thing is that's actually the best part, right? And because our job to figure out what's the next best stock. Okay, this is one of the reasons. I know you missed this part, but this is one of the reasons you should be in cash. Okay, the next stock could be something that's not in my list at all.
Yeah.
So when and the stock that goes up, the next, actually, you know what? I added this one recently, right? Compare this one with rest of the stocks. What is it doing? It's moving sideways. While it's moving sideways, market could bottom. If that happens, this could be your next best stock. These are the characteristics of your best stock. It's not gonna, while my market is dying, this stock, it's moving sideways. That's the relative strength. It means that every time there is a seller, some institutions are getting in and buying it. And when the market goes down, turns around, this is the first one to, this could probably, if market turns around tomorrow, this could probably go to $1,000. So that's how growth, the people who buy growth stocks make more money, better than the market. And our job is to figure out What's the next leader?
Maybe while you're at it, can you look at snow?
Yeah. Yeah. Well, again, came back here. Yeah, it's not. See, I mean, I did trade the snow while when it broke out and it went up, and it was an amazing trade. Let's look at a few things in snow. Yeah, it's right at 50 days. I mean, it's really surprising when I look at these things. It came right here. I mean, at this point, we didn't even have this one, right? So this is the same as the 50-day moving average. So whatever move happened from here to here is doubled from here to here, and that's where it stopped exactly, right? And now it came all the way here, and if it breaks, it will probably go to. Even this one has a lot of importance because you had a bunch of resistances right there when it was trying to move higher, and that became a support, and then it started moving higher. So now that 267 is a big deal. 269 is a big deal around that level, 270, let's say. So as long as it stays about 270, this is a good one. And if it starts to move higher, the first thing I would want to see is it breaking the trend line. Most of the times, the actual analysis does not require a lot of, mind or brain. Not really. The execution is the hard part. Okay. Sometimes, no, many times, especially when you are starting out, if this breaks and moves higher, it is hard for us to believe that this is moving higher, or you want to be part of it. As soon as it moves above 327, not a lot of people are going to buy this. Believe me, I mean, only professionals are going to buy this, and they are going to make money. And the people who are not in the trading business for a long time, they are not going to do it until 370s or unless they see these big candles. So I think I talked about this before. So even here, right? Where are the small candles? Here. This is where all the professionals are buying, and the candle starts to become bigger. You should be starting to be afraid of it. Okay. The same thing when it goes down. In my experience, the capitulation or the FOMO happens when there are big candles. Okay. The bigger the candle, the more fear or greed. I'm sure there are a lot of people right here getting in, or else you wouldn't have that kind of candle, because they are like, okay, I'm missing this. Everybody's knocking snow, everybody's making money. That's it. That's the end of it. The same way, I don't know if this is the capitulation part at all. We might see candles like this at the end. That's when we will see a turnaround. Until then, there is a higher probability we will not see that. So that's why I'm waiting for a correction right now. At least 10% in S&P. All right, let's.
How does S&P chart looks, KP?
Yeah, it's not. It still looks great. It's not. It hasn't. There is no damage in this one. I mean, one of the easiest way. Trend upwards. 20-day. I mean, from here it's been moving sideways. 50 moving higher. 200 moving higher. There's nothing wrong with it. If you don't know the rest of the stock market, this feels like you are in a great uptrend. Let's look at the weeklies. How can you say that market is not doing good when you see S&P like this? So S&P is still looking great.
So when you say S&P, you're expecting 10% correction, right?
Yep.
I'm
not expecting, but it would be nice if there would be, yes. Yeah, go ahead.
Yeah, because 10% correction will be horrible, right?
It should be, right? I mean, when do you think the buyers will come in? Unless there are, people, the big buyers are going to come in unless that's how the market is right now.
The big buys will come in after the 2-3 days confirmation, right? Bounce.
No, I mean, okay, the institutions don't care about these levels. Okay, they care. So this is how institutions work. Let's say Fidelity, okay, they have, I don't know, hundreds of billions of dollars. Okay, they are gonna buy when S&P goes down 10%. They're gonna buy the stocks that they like. Once S&P hits 20%, they're gonna buy more of it. That's what they do. Okay, they are not looking at these levels.
Okay, grabbing at the low levels. Okay.
I mean, they're not buying.
KP, why would they have so much cash? None of these institutions have so much cash, right?
No, but the thing is, they get cash every month. You have 401k. Everybody has 401k. Where do you think all the money goes?
Yeah. So that's kind of constant, right? That's why I think SPY is holding. And
No, that's not the reason why SPY is holding. SPY is only holding because of these big stocks. We know that. I mean, this is a fact. The only reason it's holding is because all these mega caps are not dying yet. But okay, last week this started. Google broke. Apple broke the trend. Again, not the big. These are short-term uptrends. Okay, Microsoft, they're just about to break. But are they gonna make a big move lower? I have no idea. And this one, this is in a downtrend definitely. Why? This is your higher low. From here, this is your higher low. And now this is your higher high. You had a lower high that's been tested again. Now you have lower low. So when you have a lower high and a lower low, that's a downtrend. So the downtrend has started here. Let's look at Apple. Apple, it did not yet. So that's your high. That's your high. It tested that high, failed. Okay. This is your higher low when compared to this one going higher from here. This is your higher low. This is your higher low. This is still above that higher low. Once it breaks this 168 level, it means it is going to be in downtrend too. And you will see more sellers coming in. As soon as this is broken, you'll see more sellers coming in. When do you think is gonna, see more sellers coming in? Probably, I would think this level. Wrong truth. This is probably the level. That would be even a level on monthly. Even for monthly, that's a big level. For weekly, I would say this is a big level. So 157 is very important. I would say that's the first big level for weeklies, because that's your breakout, 157 to 181, and that's your first support. For long-term traders, that's what it is. If that breaks, 138 is next. A little bit of resistance support here at 147, but this is major. If that 138 is broken, yeah, that's a disaster for the entire market, because these are the ones that are holding the market now. All right, let's go to the next one. We have a lot to cover today. Okay, naked options. So I'm gonna explain some of the methods that I use when to buy these things. Okay, so any stock that have, like Lucid, that have a lot of over 100% in their, let's look at what else we have. Yeah, everything is over 100% of volatility. For these, what I do is spreads does not do great job, because even if you do, butterflies even worse. So if you do the spreads for this one, they have to be really, really, really far away. But one way to look at it, or to figure out how much it could move, is to figure out the delta. So in general, you would do 40 and 45 spread, or 40 and 50 spread. Okay, so 40 and 50 spread is what? That's 60 delta. This is 11 delta. Actually, this is okay. But $10 for $40 is what? That's 20% move. So 20% move is okay in a week. Okay, let's see 2 weeks from now. 40 to 50. How much are you paying? $3. And for $3, you are getting a delta of 44. Or not even 44, sorry. 40. Always look at delta. Okay, so if you buy 40 and 50 spread, for every dollar move in this stock, you are getting 40 cents. You are making 40 cents on this one. So always look at delta. But for me, anything that says, above 80% in volatility, I want my positions to be a position to be a little smaller, but I want naked calls. The reason to have small, let's say if I am willing to spend $2,000 on, okay, on a regular position, I would probably buy $1,000 worth of this. Okay, cut it in half, put $1,000, go naked. That's it. Because when this moves, it moves really fast, and this could make a lot of money. Let's see how much it moved on that day. Look at that, 179% in a single day. That happens. And 10% is not a big move for this. So that's how for naked calls, one of the thing I do naked calls for stocks like this, and the other one I do is stocks like this, 24% or even Costco. But here I would probably go full position because these things move really slow, very, very, very slow. So that's the difference. You do naked calls for really small volatility stocks or really high volatility stocks. But very high volatility stocks, because there is more risk, you would have smaller positions and you would have bigger positions in the stocks that does not move a lot. Spreads are somewhere in between. Let's just say 50%, 50 to 60% of volatility. Spreads are pretty good. And the other ones that you would do spreads are on the ones that have really far, bid-ask ratio, bid-ask spread. You can at least reduce some of the cost. I mean, I was talking about Amber, right? I mean, it has, you don't want to, how much is that? $1.70. Okay, that's almost more than 10%. As soon as you buy it, you could lose the 10% if you don't get the mid strike. So for this one, if you do a mid strike here and also a mid strike here, you might get filled, but this is probably a good place to get into spreads. So two of them. One is actually this works both for both of them. This is around 50 to 60. You can still have a full position with spread, with a decent volatility, and it also has a large bid-ask ratio. What else? Butterflies. Most of the time I use butterflies. Again, butterflies, I use it for, okay, most of the important thing about butterflies is to figure out where the strike is. And you don't want to be in butterflies with a huge bid-ask spread, because you might end up spending a lot more money because of that higher bid-ask spread or the width of the spread. But there are two occasions I use butterflies. One is if I have good conviction and the expiry is not far away. 7 days, 14 days, that's it. Why? If you buy a butterfly really, really far enough, you are not going to get a lot of delta. Not really. And it does not work. I mean, I've tried butterflies, doing a month away, 45 days away, it does not work. When the stock actually moves, you're not going to make any money because it's 1 to 1, right? So the 2, which is against the 1, it does a really good job reducing the theta. So okay, let's.
Can you explain delta, gamma, theta, kp? I get confused actually.
Well, delta, okay. Theta is okay. Let's go there. Well, I think you should read it up, but I'm gonna explain it really fast. So delta means if you are buying this option right here, 1025 for and the delta is 53 cents. So if you are buying one of this option, for every dollar move in the stock, this option will move up 53 cents. So when you are spending $5,000 to buy this, it's equivalent of buying 53 stocks of Tesla, assuming everything else is constant or zero, which is not. So,
no, I understand it will move 53 cents for every dollar.
okay.
But what were you saying? Another correlation you said, right? 53, what is 53 to 1026?
Yeah, that's what I said. I mean, for every dollar move in the stock, this will move 53 cents. That's all delta is.
Yeah, but I think you made a one more point.
What did I say?
So delta is essentially for every dollar up or down, it will move that much, right?
Yeah, but that changes. Again, delta is not constant, obviously, right?
Yeah.
Delta changes. Okay. I think it's gamma. Hold on. I get confused, but there are only two things that actually I care more about, delta and theta. I think gamma is the rate of change of delta is gamma. Okay, how much delta changes while this one moves is gamma. But I don't really care about that. The only thing I care about is delta. So when this thing is moving my way, how much it's going to move. That's all. That's one thing. Theta is obviously, if the stock isn't moving, how much I'm going to lose. So it's 1026. If it opens at 1026, closes at 1026, I lose $2. So this will be $48 by the end of the day. So two things. So those two things are good enough, I mean, for us. So for butterfly, if it's really nearby, like 6 days away, right? When you have 6 days away, the theta really works for us. Okay. But that's one of the reasons that most of my ratio spreads work well, is because this theta is so much working for me when the stock isn't moving at all. So, and I don't know, but anyway, I think once you do these trades a few times, you will understand. I guess maybe I'm not able to explain it better.
No,
but
actually, I've done.
Yeah.
So butterfly works only when it is a sideways or short-term thing, right? It's because you are selling two calls or two puts.
Yep.
And if it hits that price, you lose money. You end up losing money, right?
So but the thing is, if it's moving sideways, this too, let's say, again, it depends on how far you were, how much the spread is. So think about it. So let's say you do 1025, 1050 and 1075. Okay. So one of this is 53 delta, 1050 is 41. So what is that? 53, 41, that's 82. 53 minus 82. So you have a negative delta of 29, and you are buying 75, which is 31. Okay, that's 2. So if you are doing 1025, 1050, and 1075, your delta for that contract is only 2.
Okay.
So you should always look at how much delta it's making. Okay.
Okay. Is that a profit? You think then? So now, I think I like this discussion. So would you do now Monday 1025, 1050, and 1075?
I wouldn't. I would do much higher. much farther away. So I would probably go for, let's say if I want 20 delta, 20 delta makes more sense for this one. So let's say 53, let's see, how is $50 away. So 25, 75, how much is that? So this is 62. 62 minus 53, that's minus 10, let's assume. So 75 and 1125, right? This is about 30. Okay. So 30 minus 2, so that's about 28. If you have, so you have a delta of 28. If you have 1025, 1075, and 1125. And how much you are paying for that? Let's see how much you are paying for that. This guy has to do something about this Zoom. The thing always comes in the middle. Somebody has to explain it to him. Okay. So you are spending $10. Okay. For 28 cents, that's about, let's assume 30. Okay. So 30 stocks costs you how much? 30,000. Is that right? Yep, 30,000. So you either buy this one of these with $1,000, which you would be equivalent to putting $30,000 in Tesla, which makes more sense. But the other most important aspect is, where does the 1075 go? For me, 1075 doesn't mean anything right here. Okay. So the mid strike should be, so this is not a place to go for butterfly at all. That's what I'm saying. So let's say if this turns around and starts to move higher, I would probably do, you know, the 1208 as my mid strike, because that's where the resistance is. What happens is, if this turns around, it will probably go to 1208 and probably move sideways, because once it moves to 1208, all these guys who made money, they want to get out. All the guys who has been here, they want to get out, because
but if you try to sell for 1208, you may not get any premium, right?
No, not right now. That's what I mean. This is not the time to buy it at all, because it has to turn around. But right now you could probably do one for here. What is that? 900, right? Let's look at that. Let's look at the put size. Put side. Okay, let's see 900. How much is it? Oh my God, 900 is good. So you have about $4. So if it has to break 1,000 for that. If it breaks 1,000, you can do 900, 950, 900, and 850. Let's see how that works. This is obviously still a directional trade. 950, 900, 850. Let's see how much it costs. It costs about $3. Let's say 350, 370, or $4. Let's say it's easier. It costs about $4, and let's see how much delta we are getting. 19 minus 18. That's minus 1 delta, and 850. So you're probably getting 5 delta, negative 5 delta, you know, on, because it will make money when it goes down. You're putting $3 and you can make up to $50. So this is still not the best place to buy, but I mean, you can still do it. You know, if the way it's moving, it's probably going to go to 900. If it breaks this level, yeah, it's probably going to go to 900. So, but if it goes down a little bit, you might get a much higher delta, negative delta. It has to be negative delta for us to make money. And you might end up spending $5. And you spend $5 to make $50. That's the maximum profit. And that's a good play.
So you buy 900 and sell
950, 900, and 850.
Or you buy 950 and sell to 900s.
Yes, you always either have support. If it's to the downside, have your mid strike at the support. Here,
Mhm.
if it's to the upside, have the mid strike right there.
Mhm.
Yep. And actually, you know what? To talk about this is a good place to talk about your broken wing butterflies. So instead of
what's the max loss that can happen in this case, right? So
your $3, whatever you're putting.
that's the loss.
That's the loss right here. Let's look at here. So okay, I think maybe I did discuss this before, but I can talk about it again. So what is really a butterfly? You are long put. Okay, it means that this is same as buying 950, 900 put spread, and you are putting a debit for it. Actually, I can let me do that. This will probably help you understand this better. 950, 900 put spread. Just say one of them. So blast off. And
then you're doing 950.
850, yep. 900 and
900.
850. So these together becomes the butterfly. So here you will let's assume this is Mandeep, do you understand how this becomes a butterfly?
Yeah, I that part I get.
Okay.
I get that part.
So now let's figure out what happens when the stock is at its extremes. What are the extremes? One thing is it never goes to 950. Okay, it just closes above 950. What happens? All the money that you paid, all of this will go to zero. Okay, and if it goes below 850, what happens? You will make $50 here, you will lose $50 here, it goes to zero. You won't make any money again, whatever $3 you put in. But so that's it. That's the end of the butterfly. But think about the other part. Let's go to. I'm going to talk about the broken wing butterfly now.
Also, after the broken wing butterfly, right? Also explain the risk or the max loss in ratios.
Oh yeah, I will. Well, actually, max loss always looks a much higher than what would be really incurred. But okay, that's the. I mean, okay. Let's go through this. So let's say 950. 950, 900, and we are putting about $3, right? So 850. Let's say 800. So instead of putting, how much you are saving? 850 and 800. We're saving about $1. Hold on. Let's go to 850. 850. Oh yeah, you're saving about $1. That's not bad. You could probably even do 750. For like 6 days, you can probably do 750. But how much you're going to lose? Let's look at that. Obviously, every time you start to save money, it feels like you're. So max profit is 4,000. You're going to lose 10,000 if it goes below 750. Okay. But the thing is, it's not going to open tomorrow at 750 or below 750. This is a huge stock. Okay, there is a lot of volume, lot of money goes through this. Generally, what happens is this is going to move slower, much slower than what we want. Okay, so doing a ratio spread, this you are saving. Doing this instead of the butterfly, you are saving $1.40. Okay, $1.40 is what? Almost 27% of your premium. If this moves slowly, lower, okay, in a butterfly, you could lose money every day, okay? And for a broken wing, you may not. Actually, I can see the I can calculate the theta and everything here, but you guys, why don't you guys, I think that would be a very good exercise. Figure out how much theta is for this one. Okay, sometimes when I do these, right, the theta is negative, even delta is negative. Okay, that's because the delta here, the delta will be positive. This is the downside. So for regular butterfly, the delta will be negative because if it goes down, we want to make money. That's the regular butterfly. When your third leg is so far away, the delta of this one will be smaller than this one. Okay, I'm a little confused here, but anyway, the overall delta could be positive. Okay, when I do the next trade, we'll talk about that. So this whole idea to do a bite but break broken wing is to reduce our premium, but also we believe that it's going to go to 900 and bounce. And if it goes to 900 and bounces, you know, it makes a lot of money for us. If it goes to 900 and breaks, what should we do? Our job is to reduce the risk. Then what we'll do is we bought once 750, right? So what we'll do is we will go ahead and do a 850. You should always be prepared what you should be doing when things doesn't work out the way we expect it to. And that happens all the time. So you buy 850. And sell 750. That's one. You buy 850 and you sell 750. So this 150, this 140 you are saving right now. Okay, if it breaks, this you might end up paying more. Okay, but the good part is, if it does not, that's what we are counting on. We are counting on that it's going to go to 900 in the next 5 days and it's going to bounce. If it does not, and if it just stays here or moves higher, you're not going to lose all that money. Instead of losing 370, you'll only lose 237, or we can even adjust that.
KP, last week you did some ratio spread, right? You had to adjust.
Oh yeah. I mean,
I think that's a better example. I think I'd like to understand.
So what I did for that one is, it's a complicated trade. I think we should probably dedicate a session for it.
Finally, see, I looked at it and then I got scared. I didn't take it.
Yeah. Well,
did you make money or lose money?
I don't know yet. I don't think I made any money. I don't know it. I need to check again, but I don't think I might. I may not make any money in it at all. It was going against us right away. I mean, as soon as I bought it, it went against me. So hold on. This is not it. This is 1 day. Okay. That's the thing about ratio spreads. Once it starts going against you, you have to be.
No, I'm not in front of computer nowadays, so that's why I'm not taking, because this needs a constant,
But believe me, I have made more money last year on this one than any other trading strategy last year. Okay, as I said, I think I made more than 65% in just Amazon and Tesla. That's only because of trading them and these ratios, because I was making money every week on it. And if you make 1,000 trades and you have to deal a couple of trades of this, it's nothing. So, and also I might have been a little more aggressive when I did this. So, it's 215.
Yeah, you can share exactly what you did, and then
I'm trying to figure out where I did that. Let's go to Slack. You know what? Let's have that conversation in the next one. Okay, I'll I'll take a picture of everything that I did, and I think that will make it a little more easier.
But you in the Slack, I'm seeing you said you got $5 credit, $6 credit. I thought you made money.
No, I did. Okay, we can just go to the Slack and we can talk about that.
Okay.
So we can calculate that, but the trade is not over. That's the part. The trade is not over. Yeah.
So you're holding some naked put for next week?
Yes, I have 5 of the naked puts, but I also have this long to the downside. So if it goes to 940 and closes below 940, and if it goes above 900, I'll make money. So anyway, let's start with this. I know what you're saying, but so let's start. I think I did only 5 strips. Okay. So I did 1050, 1035. When was that? Wednesday at 10:15, right? So at that time, Tesla was actually going higher. So I thought it was never going to come to 1050. And the reason I did that is because I had been, it bounced off of here, right? So I thought it would not break this.
We are still seeing the Slack only.
Oh, sorry. Thank you. So I thought this 1050 would be the support. So I did 1050 and 1035, and I was collecting what, 60 something cents. So this was on Wednesday. Yeah, this was on Wednesday, and then we were right here. So I thought even if it comes down, it would not go all the way here on that day. And what I did was 1050 and 1035. If it comes to 1050 and bounces, I have nothing to worry about. But that's not what happened. And on the same day, it started.
Where do you see support?
This one right here. These two candles, low of these two candles. And I had only 3 days for expiry. So
yeah, it's moving like $70-$80 in a day now. So
no, the thing is, after Powell came in, that's when everything started moving lower. So again, this is not my regular trade, but okay, anyway. So I thought even if it takes, it would, and this huge jump, I thought it would probably move lower and probably bounce even at 1072. So 1050, 1035. So I am safe until 1020. Okay. Well, actually, I would.
So you had to close. Can we go back to Slack? Show your Slack.
I will. So yeah. So we had 1050 support. So I sold it for 57 cents. Okay. When it started moving lower the same day, by the end of the day, what I did is I moved one of the 1035, okay, to the next week, which is coming week. So for that, I got 63 cents trade. Not all of them. So here I did, so I have 5 of 1050 and 10 of 1035. So when I moved this 1035 to next week, I only moved 5 of them. Now I am short next week 950s. And I still have this spread long to the downside. So as the stock started moving lower, I made money on this one, but I started losing money on this one.
Oh, you sold 950?
Yes. I mean, that's what the diagonal is. So when I bought this 1035s, 5 of them, not all of them, because I had 10 of these. I bought 10 of these and I bought 5 of these and I sold 5 of 950s. Did you understand that? What is it? Okay. So I got another 63 cents trade. So that made like what? $100.20.
Oh, you didn't close 1050, 1035?
No, I did not.
Okay.
So I still had a put spread of 1050, 1035.
Okay.
And I had a diagonal, sorry.
But that would get, but that would get closed now, right? Automatically.
No, not all of them, only 5. So here
Only,
I had 5 of these, 10 of these.
right.
So I closed 5 of these. So I have 5 and 5 of these. And I ended up with 5 of these.
And this 950
is for next week. This 950 is for 14th January. And this 1035 is for 7th January, which is right here. So I only moved half of it because the way market was moving, you know, I had a feeling that it's gonna break the 1050.
So the first one is you bought 1050, you bought 5 of 1050, you sold 10 of 1035.
That's correct. And I got a credit for that.
Right. And then you took those
5 of 1035.
5 1035s and you moved it to the next week.
Yes, that's correct. So I bought 5 of 1035s and sold 5 of 950. Again, I got a credit for 63 cents. Okay. And this would have worked really well if it bounced at 1050. If it would have bounced at 1050, this would have, this would have gone to zero anyway. But what happened? The stock started to come lower, and I started making money on this because this was what, $15 spread, right?
Right.
So that $15 spread, I started taking money because as it started moving lower. First I made 290, then I made 687, then I made 582. I was selling one at a time. Then I sold $5 for another one. And hold on. And then and also what I did is, after I made all that money, look at all these, all of them. Okay, I made $5 here, 582 here, 687 here, 290 here. Okay, so when I did the last one, I still have one left. I sold 4 of them for a decent credit. And then what I did is, I moved 3 of them because I had 950, 5 of them. I moved 3 of them and I spent $3 for it. To move it from 950 to 900, I spent $3, 3 of them. I mean, this still made me money, right? I mean, I sold all those for more than $5 and I moved it for only $3.
What do you mean move it? Like you just had to buy?
This is the rolling. This is the rolling. This is the rolling. No, actually, so I had 950 short puts. So I bought them 950 and so I sold 900 again. On the same, both of them are from the same 14th January.
Right.
Rolling. This is rolling in the same.
I mean, I'm just trying to understand, like rolling, you just simply mean you already had 950, you just sold 900. That's what you're calling rolling.
Yep. I was short 950.
Yeah.
So I bought those 950.
Right.
And I sold 900 again, but I only did 3 of them.
Okay.
Okay. When I did 3 of them, what did I end up with? 3 of 900 puts and 2 of 950 puts for next week. Because I only rolled 3 of them.
So you had to pay for now you have 2 naked 950 puts then.
Yes. Oh, it's not done yet. There's more trade. So then yesterday, okay, I had one of these still left. Okay. So I sold that one. I made another $5. Then what I did is I had 2 950 puts.
What happens if you don't sell it? Like it gets closed automatically and you get the credit. Is that how it works?
No, I mean, if it goes below 950, I would have to buy them for $950. All those stocks.
No. Let's just say that
if the stock closes about 950, yeah, it will go to zero.
Okay.
Yeah, that's what we are looking for. But my concern was, even when I was doing those 950s, my concern was that 950 is not a support level.
Light hack, Manju, light hack. How are you?
So 950 is not, there is no support at 950, not really. I just did it because I wanted to see if it breaks at 1050 or not, and it did. And I'm still worried that 950 is not a support. That's why I was moving it to 900 the next day. Now I know for a fact that there is plenty of support at 900. Let's go back to Slack again. I know this feels like a complicated trade, but anytime this does not work, this has to be done, or else we might be in deep trouble. So I don't have any of these, which expired yesterday, obviously. I mean, if I wouldn't have done it. And by the end of the day, if I would have kept this would be worth $15 because it closed at what, 1026. So I would have made the whole money, the $15. Anyway, I didn't wait for it. Then what did I do? Then I had 2 short 950 puts. Then
So that's a $15,000
which one?
or $1,500
$1,500
for each contract.
No, $5 is 500, right?
Yeah.
Yeah. So then what I did is the same day when I sold this, I moved this 952 of 950 to 900 because I see that the market is moving lower. Okay, it means there is more risk for me. So I moved these two to 900 again. I spent some more money. I need to figure out if this made money or lost money. So far, I don't know. And the stock still started moving lower. Now I have 5 short 900s. Okay. And Tesla actually bounced and then it started moving lower again. So I'm thinking how to save myself. If it breaks 900, always think about what would you do if there is a worst case scenario. So what I did is I bought only 3 of them. Now I have 5 900 shorts. I bought 3 of them, 950, 940 puts. So if this thing goes all the way to 900, this $2 will become $10. If it is a lot, think about, go back and look at these trades and you'll probably understand anyway. So, and market was doing okay and Tesla was relatively weak. So what did I do? I sold 2 of these 900 shorts, which I bought it. I was short 900 short of 900 puts. So I got rid of 2 of them. I spent another $425. Now, did I make money on the whole? I'm not sure. I really don't know. So because I'm spending $4.25. So what am I left with? This is what I left with. 950, 940 put spread, and I'm short 900 of them. Well, I mean, this is my account, but officially that's what I am. These are.
So did you initially like sell 10 contracts or 15 contracts?
I sold 15.
Okay.
Yep. Well, I don't think I have lost any money in this yet. But again, see, there is still a best case scenario in this one.
Yeah. No, but 15 contracts, out of them, only 5 you moved, is it? So somehow you closed 10 of them?
Yes, I did.
Yeah, that's where I'm not able to follow. You only put 2, 3, but then it is not adding up to.
No. I mean, this you should not consider this at all. The thing is, I have done 3 times whatever I put in here since the start. So officially, this is probably the best one. And the reason I only posted 5 of them when I first started this is because even doing 5 was a lot of risk. So I know that Dhaval actually he trades, he does most of my trades in the ratio splits. So I have to look at the people. I mean, if he's doing the same as 15 contracts like me, he could be in bigger trouble. So anyways.
Yeah, I think that's a good strategy. Whatever you do here, sometimes we're just following that. So
I know. Yep. So right now this is what I have. I mean, I have 5, well, basically officially 3 of all this. So if it goes to 900, this spread will make a lot of money. Even if it does not, if it stays about 950, I'll still make money right now, because let me show you my trade.
Maybe
So,
just one more,
yeah, go ahead.
Thing. So 2 quick things, right? Like I know you said it, like all trades, just always put in trades only, because on mobile, like mostly just monitoring that channel. But then second, sometimes, you'll put your rationale. And so when you put your rationale, like, okay, I see support here. If you just add that, I think that'll go a long way as well.
Add where?
Like so when you put in trades only, right? So in that channel, Slack channel, when you post your.
Okay. I know what you mean. I'll get back. Let's discuss that in a second. So right now the net liquid, it says, is negative. It means that if it stays above 900, even if it stays above 950, this is going to go to 0. I mean, this is actually negative, means this is all credit. This is all credit right now. Yeah. So there's still a good possibility I'll make money on this. So let's get back to the. But again, the best case scenario is if it closes below 940 and above 900, this thing will make me $10 each. How much is that? That's 5,000, and this 1,300. So $6,300 if this stays above 900 next week. So we'll see how it works out. Where am I next? Okay, let's go back.
How much amount do you risk? So like, like for example, what is that? 1:3, 1:4, like, so let's say, for example, you were saying, okay, if that happens, you'll make 6,000, but for that 6,000, what are you risking?
Well, for ratio spreads, right? Because that's the okay. The good thing about ratio spreads is, let me go back here. When the stocks are in an uptrend and you are selling ratio spreads on the downside, most of the time they could just go to 0. Okay.
Right.
That's because generally what happens is when it's going higher, it is going to take some time to turn around to move lower. Okay. That's why I don't do this for all the stocks. I do for Tesla and Amazon and really big stocks where there is a lot of money. Guys, give me a second. Let me turn on the light.
You did that for ASML, right? Did it work?
Yeah, it worked for a couple of trades, but it's the problem with ASML is there is not a lot of premium for it. And again, it was a test trade. It didn't really work out. Again, I want to look at the companies that are big and that have good amount of premium. Those are the ones that I want to look at. So far the best stocks have been just Tesla and Amazon. And I realized I think 2 or 3, that's it, ASML. And I might have done probably 100 trades of Tesla last year.
One other thing I'm noticing is like a lot of people are day trading, right? Buying low Tesla and then selling high. Yesterday also, if we see it, I think went 1080. It touched 1080 and it touched 1020. So is it hard to catch?
Okay, I can tell you one thing. The shorter the time frame, the harder it is. That's it. The thing is, when you are doing short-term trades, okay, you are looking at those candles on 1 minute and 5 minute, and when you do it on a short-term trade, it's going to be really hard. It's not okay. The strategies, in my opinion, you should not change. You need to figure out either you are a swing trader or a short-term trader, get really better at it, and increase the position sizing. That's it. I mean, When I first started, $5,000 was my position size. Now it's, 20 times more than that. So that's because over a period of years, I started getting more and more confidence. So, and if you are, and some people, right? I mean, they say that when I follow your trades, it's hard to, follow them or, do the exactly same thing, but I am unable to have the conviction that you have, and I sometimes sell it really fast. That's one of the reasons people have that is because they are really big in size. You should never be big in size. Even when you are following me, you shouldn't be big in size. You should do a smaller size, figure out if that strategy works for you. Once you get better at it, then you should get better, increase the size. So that's probably, what I would do, and that's what I would suggest for anyone. This one, I mean, which one is that? This is.
Can you add a VWAP to that Tesla KP?
Oh yeah, actually, adding a VWAP is not a big problem generally. Edit studies, go here, click VWAP. That's it. That's all you need, and you do a 5-minute generally. Because I don't always. Oh, hold on. You don't need those. Hold on. So when you put in the VWAP, they actually also give you the Bollinger Bands. You don't need the upper band or lower band. So that's your VWAP. The 5 minutes, yeah, that's your VWAP. This one. So which one was I saying was BVM, right? Okay. Friday. Yeah, it came to the VWAP, it bounced a little, then it fell down. What was the other one that I said was? I think that.
So should we buy when it is above VWAP, or should we sell when it is?
No, it's not. VWAP? It's not about buying or selling. I mean, if you're already in the position, let's say if you're doing intraday trading, yeah, you would buy this one, and if it fails, you get out with a very, very, very small. I'm opening my other.
Yeah, so like for me, I think entering is easy. Exiting is the problem.
No, I don't think so. I know everybody thinks that, but that's not true. I will tell you why. You can buy any place. And how do you decide that exit is correct? People decide exit is correct if they make money or not. But that's not how it is supposed to be. Okay.
Yeah.
I have this conversation with a lot of people. And everybody says that, my entries are always good, but how do you know? How do you decide if your entries are good? The only way that you can figure out your entries are good is how much you are risking. This is a good entry right there, 44, 45, because you know that 43 is where you would get out. Okay. Even if you get in here, 45, 43 is where you get out. That's what, $2. That's about 6%, maybe 6-7%. That's good. How much you are risking is much more important. Once you figure that out, you don't need anybody.
When you're putting just stock buys, right? I think maybe also would be good to put stop loss target.
I do most of the time. If I'm buying stock, yeah, I do.
Yeah, okay.
Yeah. When I buy stock, yeah, I do. Rarely I miss it, probably 1 out of 10 maybe. But because most of the time I do look at that because I need to know how much I'm risking. The only time I don't remember is because I'm too busy with everything else. So this is another one I also posted. When it was hitting the VWAP, it did hit VWAP and it started moving higher and it stayed higher. So, but again, there are so many different things that goes with it. One thing is, where in the daytime frame are you while this is happening? So many times what happens is stock moves higher in the morning, it comes back to the VWAP, and then it starts moving higher. Okay, that's a very, very good place to get in, because the and it's not like it goes all the way higher and goes down. No, it goes higher, maybe until here, and then it comes back here and it starts moving higher.
So when did you buy LCID? You
right
bought,
here.
I think.
No, I bought above this level.
Okay.
And this is something that I'm trying, and looks like so far it looks to be a good one. What it is this one. Now this is what I have been talking about, bear trap. I mean, I was actually short on this day. I did not lose any money. Okay, I was short on this day when this broke, but when it started to turn around or start moving above 35.80, I got out. I rolled a little bit by then, and then I got out. So I did not lose any money. But look at that. So people who are short here, okay, they will have their stop all the way here. So when this starts to break above this 40 to 46, all these guys or all this supply is gone, and this will really move really fast to 49. Always think in terms of where the buyers are, what it's doing right now, what's happening to the people that were wrong, what are they doing? I mean, that's this has this bear trap, and also this is what do you think this is? That's a bull trap, So let's assume, what is that? So I mean, this is not the bull traps. They're actually what? Sorry. I mean, when you look at the price action, for months and years, you will get to notice a lot of these things. Okay, so it's going to that resistance and failing. So when it fails, all these guys, they will either have their stop here or here. Okay, when these two levels are taken out, yeah, the move will be faster. The same way, when it's a bear trap, it goes down, fails, and the move will be faster. Why do you think this candle is so much bigger? That's because these guys are wrong. Now, if anybody is short here, they are wrong too. They want to cover. And also, once it starts to break higher, you will see a lot more buyers coming in, because they see that this move to the sideways has been broken and they are moving high, it's moving higher. And a lot of these things, I mean, you observe a lot of things, and sometimes they work, sometimes they don't. But CELH, right? This one. What is the best place to buy or go short? This is probably the best place to go short, because all these guys are wrong. It went higher and it moved sideways, and these guys are wrong. I was not ready to get in at that time, but once it broke this level, which was a support here and also support here, all these guys are wrong. Okay, and that's one of the reasons this candle is bigger, and we could probably see this kind of candle all the way here next, and this could go all the way down to 43. Now the toughest part is believing that this could happen just based on this. You watch these stocks again and again and again. Okay, the same pattern again and again, you will get the confidence. And I've been saying this for a long time. I don't know how many people are really looking at the charts, drawing these lines. And when somebody has the same chart again and again, I kind of have, I'm not sure if everybody is looking at these charts at all. But anyway.
Well, let's just say in this case, like tomorrow, you were not in the trade, okay? And you see it and you're like, okay, well,
I missed it. I missed it. That's it. This is not a place to buy it anymore. You're wrong. I mean,
no. But sorry, on Monday, let's just say, you won't go short on this now?
No, I don't. Because I'll tell you what. Let's say if it opens at 51. Okay. This could go back and test 58 again. And one of the reasons I trimmed 1/3 is also because of that. What if I am wrong and there are buyers and buyers could come in at any time? We have no clue, right?
So where would you go short on this again? Would you go short on this again, or are you done on this being short?
No, I am short right now. I still have 2/3 position on this one.
Okay.
Yeah. So.
But you won't enter now.
Not here, but if it goes back to 58.82 and fails again, that could happen. If it goes there and fails again, that's where I could go short again. Okay. And how do you know if you are wrong? Either it goes above 59 or high of this candle. Depends on how much risk you want to take. But we have to remember that all these guys are wrong. Okay, that's a very, very important information. They call it in market profile, it's called market generated information. You are just following what the market is telling you. You have no opinion at all. I mean, this is the fact. All these guys are wrong. After it broke this level. So once it goes to 43 and once it breaks this 43 or 42 level, all these guys are going to be wrong. So people for over a year, they are all wrong. What do you think is going to happen? They will either, whoever has bought here, they will also get out. And the next one would be all the way to 27. And in this kind of thinking, I never had it before. Not LCID, not LCID. Once I started shorting stocks, this is making more and more sense. Give me a second, guys. I'm looking for a stock. So this one, look at that stock. 130 to 36 in how many days? September to 4 months. I mean, this has been an amazing move, right? I mean, everybody was talking as if this is from Canada, okay? Everybody was talking that this could be the next Shopify. When you see, I mean, Shopify has moved this way. So, but what happened? When it starts to break, it starts to break big. So this was one important level. And after earnings, I think, is this earnings or I don't see earnings anywhere here, but I think it is earnings, I think. So, and this could happen to any company. So, this is what I'm talking about. So it broke this level. Actually, it went down a few days. Let me get rid of the feedback. It's distracting. It broke this level, went down a few days, came back, tested, not really, but yeah, almost there. Actually, it tested, what is the low of this one? 51.50. What is the high of this one? 51.61, see? So it came, it tested this level, the low of this one, okay? And started moving lower again. So all these guys, they are wrong. What do you think they're doing? They're just selling it out. And most of the time, what happens is this is not the end of it. You'll probably see a very big candle, much bigger than what we have right now. Probably a big candle like this 1 or 2 days. That will be the end of it. Of course, it's not going to go negative. So,
KP, can we look at QQQ? Where, what is the market telling us right now?
Nothing actually. So I was looking at the weekly charts. Look at what it did. Nothing. So 1, 2, let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. For 12
it's a higher low, right?
It's for 12 weeks. I mean, if you look at these 5, 6 weeks, it did not go anywhere. We can't see
Sideways.
anything. Yeah, we can't see anything. Nothing has happened.
So it's not bearish yet, right?
It's not. It's not. But once this low is taken out, if we have just 1 week, okay, if we have just 1 week breaking this and moving a little bit lower, it's probably going to come all the way down to 350.
Because I was looking at like listening to a lot of people and
Don't
reading.
Don't listen to people. I am telling you, I stopped listening to people. Once you start listening to the market, you should stop listening to people. They are, I don't know. I mean, I think one of the worst things I have done since I started trading is probably to listen to these people and not read the books from the people who have made millions and millions of dollars.
No, I mean like big money managers, right?
Yes,
They are saying it's
then
done.
they are never beating S&P 500. Why listen to them at all? And for them, if they are totally in cash, okay, their clients, they are not going to be happy. Would you be happy when you give your money to somebody and he's not in the market and he's still taking your 1 or 2% of your as management fee? He's not going to be happy. Nobody's going to be happy. They're going to come back and ask them what's happening. They have to have some stocks in the market. They don't have a choice. But for us, we can get in, get out really fast. And this financial media, I'm telling you, is the worst thing for an individual trader. These days, I'm not even switching on my CNBC. I'm just turning it off. There is so much, peace and time to go through all the stuff I do.
Hey, KP, on this one, right? But I've seen you putting. I think you don't do many, but I think from Motley Fool recommendation and all, right? But I know Motley Fool is not good, but are you following Motley Fool?
See, this is how I think about it. Let's assume we recently had a Motley Fool, right? What did you buy?
Yeah, you sent something, but Motley Fool, yeah, they are fraud. I know that very much.
No. I mean, see, they do their own stuff. I don't judge them. I mean, they are making money the way they can. And in a bull market, a lot of people would follow them and they'll make money. So this is same as Kramer for me, okay? Motley Fool says, let's say if you are in this one at 58 or whatever, Motley Fool comes in. He says, this is an amazing stock. What would you do? He comes in, that 40.69 is you see some resistance here, you get out. You get out when he says buy. That's how you use Motley Fool. There are 170,000 subscribers in Motley Fool. What do you think is going to happen? Everybody is buying as soon as they say, as if they are missing the train. And this is exactly what happens.
Yeah, that's because of the volume, right? They say, and because of the volume, it goes up or goes down.
Yeah, I mean, when somebody listens to, I mean, let's say you are paying Motley Fool, this is another thing. See, that I have realized over the years when I had some subscriptions is that, let's say you are paying $100 for somebody every month. Everybody is thinking that I should at least make that $100 whatever I'm paying him. Okay, that's how they take all the trades that they tell you. And what happens at the end of the day? They'll end up losing money. They'll end up losing thousands of dollars. Forget about 100. So even in our room, I would say learn and figure out how this works. Believe me, if only somebody was explaining this to me when I first started. And then somebody was asking me, I think Anand was asking me that what is the, if you would tell yourself 10 years ago, what would it be? I would be spending more time and money on learning, and not learning from these guys, the TV or the media. There are plenty of books out there. Read the books. They have amazing information, and they are talking with their own experience, and you can just put it to work directly. And that thing takes years, man. I mean,
Yeah,
it takes years. And for many people, it's hard to realize. A lot of people will realize when they lose money, but it's not easy.
yeah. One reason I stopped following analysis because they get money and then they write whatever they have been asked to write, right? So that's why I don't follow any of the analysts. But
Yeah, they do their own research. Actually, there are certain things. Let's assume there is Tesla, right? Okay. Let's say an analyst thinks that Tesla is going to explode 500%, and the stock is, let's say, around $600. No, actually $100. Okay, he knows that it is going to go to 600. He's not going to say it's going to go to 600. He'll probably say it's going to go to 200 or 150, because he doesn't want to be an extreme guy. Because if he's wrong, he's going to get screwed. Look at this guy. What's his name? The guy who follows.
what do you mean he's going to get screwed? Like no one
I
is
mean,
going to.
if he says it's going to go from 100 to 500 and it's not going to go there, nobody's going to follow him.
Yeah, his credibility will come down. Okay.
Yes, and he's going to lose money. He's going to lose his job. And the second thing, so that's why when you look at these guys who keep pushing Tesla every 3 months, is because they have much bigger target, but they will only give you the target once it moves. Let's say if this guy says 100 to 500, he'll probably say 150. Come back 50 days or 1 month away, and he'll say 250. Okay, move it slowly. And when and he comes up with a new reason every time, and I'm like, no, Tesla is not changing their strategy every month, but these guys are changing their targets every month.
Yeah.
Again, they are doing what's best for them.
Yeah, I mean, yeah, that's right. I mean, I don't know, for some reason I stopped following all those, like you said, CNBC or any media, mainstream media, because everyone works for the big money, right? Like big institutions, and so that's how they are.
Yeah.
And so on this VWAP, right? KP, like I think Arvind was asking, I don't know if I missed that your response. So when it touched the VWAP, right, and then when it goes down, does it mean that we have to sell it, or VWAP is just a benchmark and we have to follow that VWAP?
Well, what do you think VWAP is? VWAP is basically, hold on.
Average price, right?
Yes, average price that happened on the day.
Based on volume and price, yeah.
Yeah. So let me make this better first.
And I have the following question: like, what's the difference between this day range and VWAP? Isn't it both same? Like ATR,
well,
whatever.
I mean, it depends on whether you are looking on a daily and but on daily does not make a huge difference. But a lot of people do use VWAP to figure out if the average, actually there is something called anchored VWAP. So what they do is they anchor it here. So the VWAP starts here, and they will figure out, I don't have it with me. Hold on, let me see if I can help you with that. Let's go to anchor VWAP after we're done with this. But intraday for me, it tells me whether there are more sellers or buyers. That's the easiest, simplistic way of looking at it. If it's moving VWAP for the entire day, it means that the average price is going down, with volume. So that gives me an easier understanding. However, if you are doing a day trading, I think I use this. Actually, I use this for many stocks. For Lucid, look at Lucid, right? I mean, we had Lucid. Actually, I did add a little bit of Lucid when it bounced off of this VWAP, which I already had. So it went up. Look at that. VWAP here is at 39. It went to 43. Okay, that's almost 10%. Then it started moving lower, right? So I also use this 20-day and also VWAP. I actually have a separate check for with my other screens. So in that screen, I have 20-day and VWAP. That's it. I don't have anything else. Generally, 20-day would be your support, or VWAP would be your support. In this case, this move came down, found support at VWAP, and it started moving higher. That's a healthy move.
Okay, so VWAP we have to use just like 20-day, 50-day. We just have to use that VWAP, not for buying or selling, right? That's what I understood.
Yep.
Okay.
Let's assume that you missed this. Well, I don't know. Actually, there are certain cases, right? You want to buy it at open, but it opens and it goes up straight. Okay. Then it will move sideways or lower. Okay. And at that time, the VWAP starts moving higher. Okay. It will come, test the VWAP, and that's probably a good time for you to get in.
Okay.
That's again, this is only for intraday. Definitely for not the long
do day traders use VWAP like?
Oh yeah. I mean, a lot of day traders use VWAP. Actually, I was looking at it.
How about the institution? Do they use in VWAP?
Again, it's only for day traders. Look at this one.
Okay.
Look at this one. I mean, I was just looking at this before we started this one. So this is an anchored VWAP. I don't know how to use this yet, but so what he's doing is he's putting it here, okay, at the top of the value or the swing high. So it means that when it starts to move above this, okay, it means that the average person who bought here started making money here. Average person, not all of them, obviously. Average person, they started making money here. So they would probably generally, it went up, came back, tested this, and moved higher. I also hold on. No, hold on. Where is my other? Okay. No. Did I close it? Yeah, it's right here. Hold on. So there is one of this. I mean, I think you can find it online, but it kind of felt to me that it's a little harder to use it. But do I have it here? Let's not screens. Yeah, okay. So this is an anchored VWAP, okay, and you can go here and inputs. You could say, let's start with something really simple. Let's go with Apple. Okay. You would probably look for the ones. When is that? The day. What is? I barely use this one, but 13th October, right? So we would say 2021, October 10, 13th. Doesn't matter. It's not going to make a huge difference. Oh, where is it? It's supposed to draw it right. Style, visibility. Why is it not showing? Yeah, I used this a long time ago, but I mean,
this anchored VWAP is not
basic. A lot of people recently started using this. So you figure out where you want the VWAP from, and then it will show you, you know, if it's doing good with average volume and price. And
so
actually, you know what? There is this guy. You can watch him on YouTube. He's the one who started this. VWAP strategy. What's his name? Give me 1 second. I'm going to let you know.
Just Brian something.
Brian
Yeah, Brian Shannon.
That's the guy. So, I mean, I've been listening to him for, I don't know, 10 years maybe, but he does this. You know, for him, he had this is the high, and you know, it came all the way here, and that's a resistance, and he uses that for everything. And if you are using TC2000, that's another, you know, thing, platform like Thinkorswim. I think this is free for you if you use it. I mean, you can actually click on it and it's going to show it. And then I don't know, it says live version. I don't know. I never used this before. I have stock charts. Maybe I was trying to look at it, but I still didn't understand how to use it yet. But
so this one is anchored VWAP is not in TOS. That's why you went to TradingView.
No, I mean, yeah, yeah, TOS doesn't have it, but again, you know, you don't need all the tools. If you see, this is one thing I know for sure, that they are all derivatives of what? Price. That's it.
Yeah.
If you can understand price, you don't need them.
Yeah. So, and one thing, like, you don't have to cover it because you already, I think it's been more than 2 hours, but you can just put it in the Slack. Like this is what I was asking, like the indicators, right? So if you can put list of indicators, what most of the day traders will be using, like starting from Fibonacci and 20-day, 50-day and relative strength and all those, like including VWAP and whatever you may have.
Okay.
If you can put that list of indicators, right, what most of the day traders will be using. I know there are lot, but based on your understanding, like, you know, if you can put that in Slack,
yeah, sure,
then we can learn by ourselves. And if you have any questions, we can come back and ask.
and these moving averages, some people use exponential moving averages, you know, some use, you know.
Yeah, and relative strength, you said it's available only in MarketSmith, right? That's what you use. It's not available anywhere.
No, that's the relative strength indicator is proprietary for MarketSmith.
Yeah. So that's what you said. So for that, we have to, you know, depend on you for that. Yeah, if you can make that list, and then
I'll do the list. Yeah.
And when you make the list, if you can make it based on the order, I know the relative strength Fibonacci series, 20-day, 50 days.
No, actually, you cannot. You don't have an order for that. The only order that you can have is, you know, which one you would, you know, price as more. They are all different different indicators, right? I mean, one has nothing to do with the other. But the only order you need to know, or we need to know, is, you know, how does the price versus a trend line. I think we discussed that before, but yeah, price comes first, next comes the trend line, and moving average, they are not even related to that.
And okay, and in your screen, like I do see you have only volume and RSI, right?
Yep.
In addition to moving averages.
Yep.
Okay.
You don't need anything else. Seriously, I mean, I'm barely using RSI these days. So you just need price and volume. That's your primary information that you need. Everything else is a derivative of price and volume. So, all right, let me